Welcome to Gepl Capital's another market outlook video. I'm Sanket Bendre from the Fundamental Research team. And in today's video, we will be discussing some of the key highlights that happened over the last few days, as well as FIs and FIs selling, as well as inflows and outflows that happened in the month of July. And we will see valuations of Nifty, MidCap, as well as Nifty SmallCap. So these are some of the three parameters which we will look through today in this video. So let me share my screen and we will start the video ahead. Okay, I hope now my screen is visible. Okay, so as I mentioned, we will be discussing some of the key updates that happened in this week. So the first update will be on the Indian side, which is domestic market. So if you see RBI's MPC has kept the repo rate unchanged at 5.25% and maintained a neutral stance. So this policy was in line with most of the market's expectations. So market was expecting that there are neutral stance and an unchanged view could be expected from RBI's MPC within the month of this August. So as a result of that, we saw it was in line with the expectations of market. Further, the RBI estimate, however, if you see, there are some certain peaks in the estimates from RBI in terms of GDP as well as inflation. So on the inflation front, if you see RBI estimates for FY27, inflation came at 5% compared to 5.1% in the month of June 2026, which RBI said. Similarly, for FY27, the GDP forecast has been revised upwards by 10 basis points, and this has been due to the domestic resilience further, despite the ongoing headwinds from Middle Eastern regions. So also we have seen that in the first quarter of FY27, most of the companies have been reporting very positive results. So as of that, we have seen that the RBI has increased its estimate for GDP by 10 basis points. However, on the inflation side, they have lowered their estimates by 10 basis points to 5.5%. So this was on the positive update. On the global side, the US Federal Reserve meeting was also conducted in the month of July, at the month of July. So they also kept the federal funds rate unchanged at 3.5 to 3.75%, which was again in line with the market expectation. So this decision is with the fifth consecutive policy pause in 2026, with FY MC voting 9:3 to keep the benchmark on rate unchanged. So if you see three governments dissented in favor of a 25 basis rate hike due to the ongoing concerns of inflation and resilience of the US economy. So in the US, if you see, this was the first time that we saw voting of 9:3 after a long period that 9:3 vote was being done to form as three governments would had voted for a 25 basis point of rate hike due to the persistent inflation in US, but majority of them were against the rate hike. So as a result of that, rate hikes were not done, and the federal funds rate was kept unchanged at 3.5 to 3.75%. Further, on the domestic front, SEBI has introduced the closing options scheme, that is CAS system from August 12 to enhance the cash discovery mechanism within India. So this new closing option mechanism for equity cash segment is applicable to stocks in which futures and option there is open trading is done. Under this new rule, the continuous trading session ends at 3:50 p.m. for selected stocks in the FNO part, and the closing option scheme runs between 3:28 to 3:30 p.m. and the price band during this closing option session is capped at 3% above and below the stock's reference price. So this scheme has been started this week onwards. It is on Monday, 3rd of August, and since then we are seeing a new type of closing option session for the overall Indian markets. The data points for FPIs, as I mentioned earlier, discussing. So if you see foreign portfolio investors turned net buyers in the Indian stock market in July, in the last month of July, and this came after a relentless fourth consecutive month of selling. Given that we saw improved valuations on the large cap segment, which attracted overseas capital. So FPI's net bought Indian stocks worth of approximately 20,000 to 20,000 crore in the month of July. And this inflows came after a sell off of 1,70,000 crore in the month of March. In the month of April, we saw 60,847 crore of selling. In the month of May, we saw a selling of 38,963 crore. And in the month of June, a selling of 49,340 crore. And after that, we saw an inflow of 20,000 crore. So if it is from the month of March till June, we saw a declining trend of sell-off from FPI, and in the month of July, we saw contrast to that trend. That is, we started seeing inflows from the FPI's farms. So sectors with highest inflows were consumer services, healthcare, consumer durables, IT, and construction materials. Similarly, sectors with the highest outflows were capital goods, telecom, auto and auto components, construction, financial services, FMCG, media and entertainment, oil and gas, utilities segment. So this is third slide for the valuation part of indices. So if you see, Nifty is currently pretty close to the average of 5-year average of 18.7. Similarly, MidCap currently trading close to slightly below its average, 24 times. However, my bad. So if you see MidCap is currently trading on the higher side of its 5-year average of 24 at 27.8 times. However, small cap is currently trading lower to its average of 17.5 times at 23.3 against my bad. So it is currently trading at a higher side than small cap on the higher side of 7.5. So if you see Nifty is currently pretty close to its average, MidCap and small cap are currently trading at a higher side of the 5-year average of 24 and 7.5 times, which indicates that large cap currently still are at a good at a good valuations compared to mid and small caps. So I hope we got some insights in this video. And if you like this video, do like, share, and subscribe Gepl Capital's YouTube channel. Thank you.